Welcome to the Weekly Trend, a podcast for navigating the markets through the lens of technical analysis. The Weekly Trend podcast is provided for educational purposes only and does not constitute any professional advice. Listeners should not act upon the information or content without first seeking advice from a registered financial planner.
Welcome back to the Weekly Trend podcast. Today is August 30th, 2024. S&P sitting at exactly, well, it was 30 seconds ago, exactly 56, or now a tidbit below that. Joined today by Kevin Ferrari, and excited to get to discussing which kind of an eventful week in some areas and some other areas more eventful.
Yeah, really, if you took this week off, you probably wouldn't even have noticed anything, even really the last 2 weeks.
And you were saying before this, really the last 2 weeks, pretty logical spot. I mean, we had a very strong rally for, since when did we bottom? Like the first week of April, and then ripped higher, down below 5,400. Right back above, very quick move, and now we have to spend 2 weeks consolidating, and a pretty flat week for Hey, S&P is down, 20 bips on the week. Nasdaq hit the hardest, and so no surprise that tech was the worst performing sector this week, but some other positives taking place as tech. Obviously, it's going to what it does is going to weigh on the market, but really not that negative when you look outside that.
No, your consumer discretionary down quite a bit, communication services. Kind of your, areas that were more so leading earlier in the year.
Mega cap-ish.
But really outside of that, it's been, decent week, right, on like an absolute basis. Financials look really good this week.
Financials up 2%, and that's with today being a little flat today. But we talked about materials. Even healthcare is positive on the week. Dow Jones is positive and hit a fresh all-time high this week, which has never, I just read this and I wasn't aware. Did you know that there's never been an all-time high in a market? I just read that on Twitter. Fascinating.
So for anything, makes sense, huh?
What about outside of stocks? Okay, so pretty uneventful week for broad markets. So outside of that, anything worth?
At least kind of, last week, maybe a little bit earlier this week, bonds were kind of starting to show some life. So if you look at AGG above 100, kind of a good sign. It's kind of pulled back here later this week. So, kind of flirting with that $100 level again. TLT, not quite to that point, but you're still seeing corporates look pretty good using LQD. Junk bonds still look fine.
Yeah, I think I'm with you on TLT. I think above 99, 100.
99. Yeah.
You probably get into some type of uptrend. Now that's still on the back of a monthly chart, which says, if I flip it, if we take rates on a monthly chart and say, okay, rates probably going higher over the coming years, but clearly there's going to be counter trend moves. So could this be the start of one of those? Maybe.
Definitely could be. Yeah. And kind of your junk bonds, your more risk on in that area still seem to be kind of, leading the way, like some of your lower credit quality stuff, or, sticking with your floating rate bonds that don't really have the same interest rate sensitivity. As, to rising rates, at least, still seem to be kind of the place to be on the fixed income side. So, a little bit more of the same there, at least, seems to be more intermediate long-term basis, but yeah, we'll see on the short term. Can AGG stick it? We'll see. mean, it's tried before. Recently here hasn't been able to do it.
Definitely a big area. We are rates and bonds coming into kind of intermediate term decision point about what we're going to do here.
Mm-hmm.
But then stocks versus bonds that's fallen off. I don't talk, TLT or S&P or, to your point, junk versus AGG, big rebound. Junk by itself looks pretty good. Also kind of one of those relations, like I would put junk versus Barclays Ag in the same category as S&P high beta versus S&P low vol, where it's like, yeah, great rebound, but we really kind of screwed some things up relationship wise that we got to fix now. And it's going to take some work. I think it's, for me, the high beta versus low vol, we spent basically the whole year in this range, which is fine. Broad markets had moved higher, broke lower, kind of come back up to retest it. We'll see if it can fix itself. We still have an upward sloping 200-day, which tells you you're in an uptrend. But yeah, those are kind of my two risk on, risk off measures where I'm like, yeah, definitely a good rebound along with stock last week. But
not only that, but talk kind of like more risk on. I mean, like if, your foreign bonds really aren't doing too bad, like emerging markets, high yield.
What are you using for that? EMHY?
Yep. Looks pretty good. And even like there's a bunch of different funds out there for like your foreign government bonds and things like that. International corporates, look good. Can't remember. I was looking at that a day or two ago. I can't remember the ticker.
Emerging market high yield versus J&K makes me want to own emerging market high yield.
Yeah. And if you're telling yourself that, right? That can't be
the worst thing for risk on around the world.
No. And even, it's not the nicest looking chart in the world, but Chinese bonds using CBO have been doing pretty well here lately, over the last month or so. I'm not saying that they're necessarily out of the woods yet on like a long-term basis, but you're at least seeing them, stop going down, right? Kind of start to appreciate.
Hey, look better than long-term treasuries.
Yeah, right. So, I think it tells you a lot for sure.
Golly, we're going to have to, I don't know. Do you know much about South Korean debt? You might have to be learning. Emerging market high yield. That is definitely one to keep an eye on.
Mm-hmm.
Good find, Kevin. One thing that I think was interesting development over the last couple weeks is, early August, we had the big, what are the macro people, the yen carry trade and Japan and things there. So while the Nikkei itself has not recovered, again, big bounce back to those 1980, but EWJ, which would be kind of the dollar trade weighted version of Japan, already back to year-to-date highs. Thought it was all-time. We're not at all-time highs, but again there. But year-to-date highs, we have like everything else that. Really, it was a 4-day move in Japan, got everyone spooked, and like everything else we've talked about on the podcast tonight or today has really recovered.
It kind of seems like, when you start digging into a lot of the individual stocks and things like that through some of these sectors, a lot of your leaders earlier in the year, kind of spring, summer, really kind of paused, sold off, when the S&P sold off, kind of let everything else catch up. And now you're seeing like a lot of the charts, just like you're talking about with Japan, show that similar look where now they're, rebounding, kind of caught back up. And I guess now the question is, right, are those previous leaders going to kind of now take the lead again? Because, I think like you were talking about financials before, look really good. Really the leaders in that sector before were kind of like your insurance names and like a lot of your investment managers, brokers. Like some of your exchanges, things like that. And you're seeing areas like that start to pick up again. but you're not necessarily just seeing that in financials. It's just one example. I think you're seeing that really across the market as a whole.
You said airlines were the second best sub industry this week.
Yeah,
Did you
which
tell me that
kinda
before the
surprised me.
call? Yeah. So, I mean, there's your industrials. I know you brought up
XLI looks good.
aerospace and PPA. I mean, PPA didn't stop.
No, that's the thing. Aerospace defense was really kind of one of the true constants that really never sold off for the most part.
And that's been back at all-time highs for 2 weeks and just cruising.
Right.
Another one that I would put in that category this week has been a little flatter, but home build. Home builders, one of the strongest ones before, got hit for sure. I mean, everything got hit, going into early August, kind of that last, really July 30th and then the first few days of August. But again, right back up to just a couple percent from all-time highs.
Yep.
Gold miners have hung in there.
Yeah, they have. Really even just gold itself too.
Gold has, gold has
Looks pretty
had
good.
really, really nice last couple weeks. Relative chart, depending on your time frame, I would like a little more from the relative chart on gold. Gold miners holding up well. I think Newmont, which is kind of your big canary in the coal mine, or at least for me, we're getting a little tight up in here, up into this $55 area, but strong. And VIX back below 18, which has kind of been a bigger area, at least for 2024. Longer, really 18 over the last couple years, bigger area, some polarity there. 14, 15, basically where the 200-day sits right now on VIX.
Right, which I think, not to beat a dead horse, I guess necessarily, because we've talked about this probably quite a bit, but with what you would expect seasonally this time of the year, it's probably not too much of a surprise.
No,
even with just what the S&P is doing, really just kind of chopping around sideways and consolidating. Makes sense. It's not by any means
election season. We are getting into September and October of an election year, so yeah, totally agree. More likely chance that things get weird. We're still not to all-time highs on S&P. We've got to gap it from August 14th into the 15th. So gap sitting at 54.70. Does that need to be filled? Are we, we seasonality wise, we've got time to build out a range.
Pretty good range.
November.
Yep.
And I'm not saying it's going to be fun or pretty, but it's definitely, again, to Kevin's point, we have talked about it. We were cruising for pretty solid election year seasonality. They changed candidates in the middle of the night. So now are we going to revert back to, the seasonality where we have no incumbent? Right? That's the two. And it looks like we had this discussion just 2 or 3 weeks ago, I think, Kevin. I think it kind of looks like the market might want to. Now we get to all-time highs. We're sitting at 5,700. Clearly, maybe not range bound for the remainder of summer and fall, but you could definitely, I could see us early mid-November breaking above 5,650, 5,700 after another 6-7% correction. Correction.
Yep. Yeah, I don't think you could be too shocked about that. And I wonder, what do you think about the way, like utilities and staples look now? Utilities, like that's about as clean and consistent almost as a, move since essentially July that I think you can probably get. Just been kind of steady.
Yeah, they even got things that didn't. They literally, so they got hit while everything else was in a 4 or 5 day drawdown already going into that Monday, August They got hit one day and then just kept going.
Didn't really phase them.
And
even
maybe
more
we
so.
did. Yeah. I think so many people were worried about utilities, especially March, April, May, the relative strength being a warning sign. And to me, utilities going down on an absolute basis and their relative chart moving up is a warning sign.
Right.
But the absolute chart and relative chart going up is, again, I don't take it as a warning sign. Is it fun? Would I rather buy things like mid-cap software and higher beta things? Yeah. That'd be way cooler than buying gas utilities from Delaware.
Right. Yeah.
I'd rather, no offense to WEC and your electric utilities. It's just not as fun. But yeah, maybe those are the leaders that they're what? They're the only sector above a relative 200-day still?
They were, yeah, still.
Financials are back.
Right.
Financials are back. Nice recovery from financials.
Man, I mean, staples here more recently look pretty good. Real estate's still hanging in there.
Real estate,
an absolute.
that's real estate, XLRE above a relative 200-day. I know it's fun. I know it's exciting, but the potential continues to grow. That these might want to be the areas you're involved in.
But I think that's kind of the thing though too, right? Like the relative performance is pretty short-term in nature at this point, right? I mean, you're seeing it maybe over, a couple weeks to a month. Like it's not like a lot of these long-term relative charts like that. The picture has really changed. I mean, by any means.
No, I mean, a lot of these are downward sloping relative 200 days.
Right. So,
and you want to get excited, but then, right, it's like a bad relationship. And you look at all the times you've been lied to and teased. And it's, some of these are just you got to kind of you got to assume that they're a counter trend move. So then do we go back to, I know you had some thoughts on this about, do we see broad strength or from a relative basis, whether they go up or down, do we see relative strength from these other areas? And then we get to November and it's
kind of more so what you saw the first half of the year. Everything kind of goes back to
the MO of the last 2 to 3 years of
your Meg 7 back again. Yeah. I guess time will tell, right? But I mean, I definitely would not be shocked really by any means.
And they've tried this with, we talked down, equal weight S&P. Also, I think all-time highs this week. Yes. Actually, last Friday. Actually, I take that back. All-time closing highs were last Wednesday. But yeah, held up well this week. And they've done this. They've done this on a relative basis. They did it Q4 2023.
Yep. But I mean, I think even this time, right? Like if you look at RSP to SPX, when you kind of look at those, what would that be? Your 2020 lows, kind of maybe just barely moving into 21. Like they couldn't even reclaim those this time. Tried it.
So that's where is it just some type of polarity counter trend move? Where, to your point, we went back to a logical spot. And because these relationships move so quickly to the downside, you get these kind of rubber band snaps. But long term, they don't do anything.
Right. Especially that chart with equal weight S&P, I think, is really telling, kind of more so to thought, right, of do you see once we get closer to the election and kind of some of these seasonal periods and stuff start to really line up where you start seeing your technology, your communication services, maybe a little bit of discretionary pick back up again, like we saw before, and just kind of take off. And I mean, a lot of these things are happening at levels you would expect and kind of just have that look like they might chop around here a little bit for a while, even on a relative basis. And
while we spend 100% of our time worried about the technicals on the charts, and that's what we choose to pay attention to. It doesn't, I think it's fair. I mean, there are hundreds of billions, trillions of dollars traded around. I don't know what's going to happen in November, and I'd rather just be in Apple because I know Apple's not going bankrupt anytime soon. Like, that's a real thought out there. And yeah, I mean, if I get it. Do I agree with it? No, because we're hardcore technicians.
Mm-hmm.
But I still think it's realized that lots of money, market moving institutional money, is managed based on what we've just talked about. They're not worried about, they haven't looked at a relative chart in 25 years.
Mm-hmm.
But are they worried about the election or what if so-and-so gets elected, what it means for, whatever group of stocks? Yeah. All right, Kevin, I know you have some important work to do. Got a client education here in a few minutes, so I want to make sure that you are off in time for that. Is there anything you would like to leave our audience with today?
No, I think we covered the high points. I mean, in a large part, really, it's just kind of more so the same we've been seeing here for a couple weeks, right?
Hanging out, pretty practical consolidation. I would rather see us go sideways for 2 weeks than give it all back. So
exactly, for sure.
All righty. Well, that is it for this week, and we wish you all a great Labor Day weekend.
Yeah, for sure. Have a good weekend. Enjoy the extra day on Monday.
I know I will be enjoying it.
Absolutely.